The National Union of Mine Workers has rattled South Africa's gold miners by demanding an 84% hike in entry-level salaries. Of course, this was entirely expected. The thing is, the flip side of it, revenues aren't exactly doing well, margins are fairly tight, and costs, especially electricity, are heading up. So where do these all balance out? We'll be answering that question tonight, right here on Global Business Africa. Here's what else we have in the pipeline. President Mugabe has expressed concern about South Africa's dominance of trade among the SADC trade bloc. And bark cloth is back to Uganda, but with a more modern touch. Let's start in South Africa, where the National Union of Mine Workers is demanding an 84% pay rise for entry-level gold mining workers. Now, that's nearly 10 percentage points higher than previous demands. NUM wants employers to pay a basic pay of $888 a month. Entry-level gold diggers right now earn about half of that amount, but that doesn't include various allowances that are structured as part of their overall pay package. Demands by the National Union of Mine Workers also include a 15% increase in pay for miners, artisans and officials right across the board. These increments come at a time, or rather these increment demands, I should say, come at a time when the central bank is concerned about surging wages. It might also set the stage for fairly tough and possibly bad-tempered negotiations and a potentially protracted dispute with the gold mining companies. Let's get the latest now from Angelo Coppola. He's live in Johannesburg. He's got more data on this story. Angelo, 84% is a ton of money. It's much higher than the 75% or so we first heard that NUM was demanding. What triggered this change?
Well, I had a chat with Frans Baleni earlier. He's the General Secretary of the NUM, and he's saying that he's not going to negotiate with the Chamber of Mines in the media. He's not confirming either of those two percentages, either the 84 or the 75% demand. All he would say to me was that the demands that they're making intend to close the apartheid wage gap. They're also hoping to see an improvement in the housing benefits, as you mentioned, one of those allowances, and they're looking at a review of the current Patterson grading system. So that 84 versus 75 is up in the air at the moment. He's not confirming either one of those two numbers, but those negotiations are due to start quite soon. Raman?
Indeed. Walk us through what happens now, especially for those of us not in South Africa. The demand has been submitted by NUM to the Chamber of Mines. What happens next?
Well, in fact, Raman, all the other unions have also submitted their demands. So what happens next? It's all about process in the next 2 weeks. Baleni was telling me that they're going to probably have a preliminary meeting either at the end of next week or the first week of June. That's about the 8th of June. Here they're going to, the Chamber will formally acknowledge that they've received all the demands, and they're going to set some ground rules. First of all, they're probably going to have to decide where the actual negotiations are going to take place. The unions may opt for a neutral venue. Last time round, they had that negotiation process at the Chamber of Mines offices, and that's when the trading in horses actually begins, Roman.
Indeed. Let's look at the wider context, though. Hasn't last year's wage deal between AMCU and the platinum firms only raised expectations for higher wages among gold miners, especially given the disparity in basic pay between entry-level gold miners and entry-level platinum miners?
Raman, there's no question and there's no doubt that the expectations are higher this time around compared to when the sector sat down in 2013. As you know, AMCU's also tabled a 12,500 Rand basic demand. That's a little higher than the 10,000 odd that the NUM have put on the table. UASA, the third biggest union, has taken a view in terms of salary increases as well. They're not talking percentages, they're talking actual take-home pay. So it's all about the money. But Solidarity, who's put a 12% wage demand on the table, has suggested that all the unions as well as the mines need to be careful about the demands and how far they're prepared to put the industry at risk. Rahman?
Indeed, very much the contrarian position. Finally, let's talk about 2013. Back then, AMCU Challenge reached talks with the gold miners, but back then it was also a much smaller, much tinier union. But after the strike in 2014, it surely has a much more enhanced bargaining position right now, doesn't it?
Raman, it's quite complicated. It's definitely going to be the first sticking point. AMCU says that its member numbers are higher than the official stats that have been touted by the Chamber and by the various mines. So it probably means that if that number is higher, that there's going to be more recognition at more mines. As it stands right now, the NUM have 50,000 members, or around 54% of the unionized members in the mines. AMCU are sitting at around 27,000 or 29%. AMCU claimed to us last week that their member numbers are in fact 40,000. Either way, I don't expect the wage talks to start until that member recognition number is finalized and accepted by both parties. But given that the opening gambit by AMCU is 12,500, I expect that the miners are going to be in for a long, cold winter. Raman?
Indeed, we'll leave it there for the time being. Thanks for the update. That's Angelo Coppola live in Johannesburg, South Africa. He'll be keeping tabs with the rest of the team down there on the wage talks as they proceed. Now, still in South Africa, the country could soon be having a second stock market. The banking and investment group Bravura has applied for a license to operate an entirely new exchange in the country. It's leading a consortium of banks and companies in a bid to set up a new platform to run alongside the Johannesburg Securities Exchange. That's the largest in Africa. Simrita Naidu has more.
For Africa Exchange is a new trading platform that's expected to cater for companies that hold shares that are no longer eligible to trade on the JSE. Moves to create the new exchange came after the Financial Services Board issued new rules for over-the-counter trading.
There's different parties who it will actually benefit. I think obviously from for the existing shareholders in affected companies, they're currently in quite a difficult space. They've invested into shares that had some trading platform, and they're not exactly sure what's going to happen with the tradability of their shares. So we hope to provide them a platform that will not just give them liquidity, but much better liquidity than what they previously had, and much more value.
From this year, companies that trade over-the-counter shares, those that have restrictions in trading their shares, and companies with BEE ownership schemes will have to find a more regulated platform to trade. For these companies that don't meet the criteria of the JSE, the new exchange becomes a perfect fit.
There's also a big need for companies that's not the top blue chip companies to have some platform where they can actually list their shares, where they can illustrate that they can operate in a regulated environment, and where they can then over time perhaps become one of the larger companies to go and list onto the JSE, for example.
The exchange will also provide a more accessible platform for new and inexperienced investors.
For the public, we're really trying to make investing for them very easy. So it's very much a technology-driven solution. So the public would be able to invest either by dialing into a call center, going into walk-in centers, using their phones through a mobile app, going through online share trading platforms that you will already see.
For Africa Exchange will provide multiple avenues for shareholders to trade and invest. The Bravura consortium submitted an application for a trading platform license in February this year. It's still waiting for approval. Simrita Naidu, CCTV, Johannesburg.
Well, in East Africa, the World Bank says it expects Ethiopia's economy to continue to undergo significant growth, even as the country heads into a national election. The financial institution predicts that the economy will grow by about 9.5% for the fiscal year ending in June, before then accelerating to 10.5%. It also says inflation should remain in the single digits. The ruling Ethiopian People's Revolutionary Democratic Front is campaigning on its economic achievements ahead of Sunday's election. That said, critics do argue that the government has stifled any legitimate political opposition. The Ethiopian government has targeted annual growth of about 11% for the last 5 years. The nation in the Horn of Africa remains one of the world's poorest economies. Now, in case you've been keeping count, well over 40 days have passed since Kenya's government unilaterally shut down 13 money transfer organizations. To date, it hasn't given any concrete evidence of any wrongdoing by any of those organizations. Now, given the fact that over $100 million a month is sent to Kenya as remittances, this unilateral move has affected not just Somalia's refugees, but also Kenyans who rely on remittances to meet their daily needs. When I spoke to Degan Ali, Executive Director of Adesso, earlier today, she also argued that this shutdown may have accelerated the Kenya shilling slide against the American dollar.
We are also seeing impact on the Kenyan government and the Kenyan economy. As we all know, that the exchange rate between the US dollar and the Kenyan shillings has increased significantly to the detriment of the Kenyan shilling. So we are seeing quite a lot of impact that this is having. It's also having impact in the humanitarian community. The likes of Adesso and other NGOs are having a very difficult time getting money to the field operations, to pay salaries, to do our programs, to do our activities, to support vulnerable people in Somalia.
Just to be clear, let's get back to the point you made about the effect this has had on the Kenya shilling, on the dollar shilling rate. To what extent can we really say that this has had an effect on that exchange rate, given the fact that tourism, of course, is also taking quite the hit? Agricultural output hasn't been especially stellar, and of course, at the end of the day, horticulture, tea and coffee haven't been doing well in the last year.
Well, I'm not an economist, but I certainly know that the rate has been increasing since the closure of the money transfer companies. And we know that the tourism sector has been negatively impacted sometime before April when the money transfer companies. But we didn't see a significant spike in the rate until April when the money transfer companies started operating. And I think this is a reflection of the fact that the Kenyan government and a lot of economists really don't understand how critical the remittance sector is to the Kenyan economy.
Isn't this policy ultimately a counterproductive one?
I mean, certainly, I would agree with you on that because, you know, when you cut the lifeline of people and already you have youth who are jobless, who are sitting in camp settings, not being able to be productive, get good quality education, start businesses, have jobs. And then now you add to the lifeline that they have, which is the relative who's working 2 or 3 jobs to send money back home, and you cut that flow. Yes, I mean, I think it's just going to have a very negative backlash on the part of the communities against the Kenyan government. And here we are where the Kenyan government has a legitimate right to seek security of its citizens, and it has the right to ask these refugees for assistance in terms of information and all of that. But it's very difficult to get these people behind you and to become supporters and give you information that would risk their lives when you have cut their lifeline.
Indeed. Let me play the devil's advocate briefly here. The argument that some in government have made is that we've only cut part of the financial system out of the equation. There's still other formal money transfer organizations that could be used to move money from the US and the UK into Kenya and on into Somalia. What do you say to that argument?
That's not true. Actually, the likes of MoneyGram and Western Union do not have a significant network in Somalia, and certainly not in many parts of northern Kenya. And while they do have presence in Nairobi, a lot of the people that depend on this remittance flow, such as in Isli and the business community, don't use it. One, because their network, as I said, where they would be transferring money if you're a businessman into Somalia is not very significant. And secondly, the cost is much higher than the 3 to 5% that the Somali transfer companies charge.
Fairly interesting discussion, of course, between myself and Degan Ali from Adesso a little earlier today. Let's make a quick run through markets now. Another day of red ink right across the board. The biggest losses, however, in percentage terms coming through from East Africa, specifically the 20-share index in Nairobi. Now, of course, there's been a wave of earnings, so investors essentially are cashing in, liquidating some positions and moving forward to lock those in. And that partly explains what we're seeing at the moment. We'll be looking at Guinea's economy next. It's taking quite the beating from the Ebola outbreak. And President Mugabe has raised concern about South Africa's dominance of trade within the SADC trade bloc. We'll tell you why shortly. Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening.
Global Business, weekdays at this time on CCTV Africa.
This report by the African Green Revolution Alliance says climate change will slash food output. Within the next 30 years, the number of malnourished people in sub-Saharan Africa could jump nearly 40%.
Welcome back to the program. You're still watching Global Business Africa. Let's head over to the West African nation of Guinea. Officials there say they underestimated the effect Ebola's had on the national economy. The outbreak, which is the worst on record, has resulted in thousands of job losses, cut government revenues and also hurt the flow of international investment. Volta Karelsis spoke to Guinea's Finance Minister Mohamed Diarra in the capital, Conakry.
Minister of the IMF was recently in the country and it said it expects the growth rate to be at 0% for 2015. Do you agree?
Nous avons présenté le budget de l'État à l'Assemblée nationale en 2014.
When we presented our national budget to Parliament last year, we predicted an annual growth of 4.5% and a level of inflation of 8%. We made this prediction under the assumption that Ebola will be contained by December. Unfortunately, as Ebola is still here, so we have to change the prediction. And the second reason we revised the growth rate downward is the low oil price in the international market coupled with the low price of iron ore. The third reason is the protests that we've heard about the elections in recent weeks. And the fourth reason is that this is an election year. When we compare last year and this year, you will see that our economy will be in recession by the end of the year if Ebola persists. So we agree with the IMF's assessment that the growth rate this year will be 0%.
Donc, ça aussi, c'est une hypothèse qu'il fallait revoir.
What damage do you think Ebola has done to the economy in dollar terms?
Il y a eu un manque à gagner de plus de 1000 milliards.
We lost more than $150 million of government revenue last year. In the private sector, we lost $200 million, but we don't have any information about the informal sector, and this is our largest sector. Our national economy is mainly made up of informal sector, and we have some difficulty to get the real numbers of the impact of Ebola.
La mine des infrastructures.
Rio Tinto was supposed to develop infrastructure to extract iron ore in the south of Guinea. With the Ebola outbreak, this project has now been delayed. On the other hand, I say the mining sector has not been affected because CBG continues to mine aluminium. It increased its production from 13 million tons of bauxite in 2013 to 15 million tons last year. When we take the iron ore sector, Ebola has had a great impact. But when you take the bauxite industry, there is no impact.
Let's move on to Zimbabwe. The country's president, Robert Gabriel Mugabe, has accused South Africa of using its economic dominance to achieve an unfair advantage over other countries in the region. South Africa enjoys a trade surplus against most of the countries in the Southern African Development Community. The simmering issue was the bone of contention at a recent regional summit held in the Zimbabwean capital of Harare. Farai Mokutuye explains.
South Africa's dominance could be a stumbling block to regional industrialization ambitions. Speaking after the plans were mooted at a SADC summit in August last year, the bloc's chair, Robert Mugabe, made known his unhappiness about the disparity.
We also appeal to South Africa, which is highly industrialized, to lead us in this and to work with us and cooperate with us, and not just to regard the rest of our countries as open markets for products from South Africa, because we want a reciprocal relationship in which we sell to each other and not just receiving.
Nowhere is the skewed relationship more apparent than in Mugabe's own country. Last year, South Africa exported goods and services worth about $2.4 billion compared to Zimbabwe's $200 million worth of exports the other way. Zimbabwe's economy has been ravaged in the last decade, reducing productive capacity and opening the door for imports from South Africa, which enjoy free access under regional trade agreements to grab shelf space. The trade gap is down to local policy deficiencies in particular those that protect local industries.
Here in Zimbabwe, we are still very open. We have opened up, but we don't have internal policies to mitigate the effects of trade liberalization. We have Pick and Pay, which buys tomatoes and potatoes from Polokwane, but we have farmers who are operating here.
Many believe the remedy is to enable local manufacturers to get back on their feet and compete on an equal footing with their international competitors.
We need to provide the enablers, water, electricity, cheap utilities, for us a low-cost finance, and we're able to be competitive, but also raise production. That's number one. Number two, then we need policies which embraces local content. Now, to cut the import bill, you need to value add. That's number one. Number two, you also need to persuade that there should be moral suasion from companies which are operating in Zimbabwe to buy locally. And they must give tax incentives for companies which are compliant with that. Then punitive tax for a company which is going against that.
Failure to do so could see the country continue to be sidelined from enjoying the benefits of free market trade, which is now the reality for international business. Farai Mwakutuya, CCTV, Harare, Zimbabwe.
Here's the flip side to that story. Some experts essentially argue that Zimbabwe's president's argument in his criticism of South Africa is unjustifiable at best. South Africa, of course, is the largest investor in Zimbabwe and several other African countries.
Well, one looks at his effect on his own economy, and I think he was pretty much a bully in his own economy, which presided over its destruction. I think Zimbabwe had, before the whole destruction that occurred, had a business sector that had corporates which were able to actually compete in the regional space, but that capacity has been greatly diminished. At this stage, I think one needs to appreciate that South Africa has achieved some economic success and is able to project that economic success elsewhere, and that has helped. The investment from South Africa has helped Africa in many ways, because it's helped to generate multi-sectoral growth, which was not there before 1994. That investment has been significant in the continent. Now, I think it would be better for Africa to emulate the reasons for South Africa's economic success rather than to criticize and resist it.
Quick run through commodity prices here for you. Of course, crude oil still continuing with its yo-yo movement, 64.45 being the relevant number here. Some related news in the industry, this time from Nigeria. Protesters shut down crude oil production at 2 flow stations on the Nembe oil field. That's in Bayelsa State earlier today. Keep in mind, though, this has had virtually no effect whatsoever on pricing, partly because there's about 15 or so million barrels of oil still unsold in Nigeria alone. A market glut isn't going anywhere anytime soon. We'll be talking about fashion next, specifically traditional bark cloth from Uganda. It's back, but with a modern touch.
Let's go and check checking. 不像国内一切都是好像你都预算好了的。
穿过最荒原的地方，从赞比亚修到坦桑尼亚，最荒野的地方，它就只有中国人能那么穿。
门槛还是比较低的，还不一定像其他的族群的话这么看得开。我觉得不理解也是正常的，我也有准备，也有心理准备去适应。
Welcome back. Artists in Uganda are reviving the traditional craft of bark cloth production. This UNESCO-listed fabric has been used among the Baganda for more than 600 years now. Traditionally, it was worn by members of the royal family, but the textile is now becoming increasingly popular among the nation's modern designers. Michael Baleke has the details.
Pounding away at a tree bark with a wooden hammer, Paul Bukenya has been doing this for the last 50 years. Making backcloth has been a practice in his family for over 300 years.
Way back, the backcloth was a traditional attire, especially for the kings and royals. The fabric became popular and a key economic activity to many households at that time.
With the introduction of cotton and other modern fabrics, backcloth production slowed and eventually faded out, reducing its usage to particular culture and spiritual functions. Nevertheless, artists are moving to revive the fabric. They believe backcloth is the answer to climate change.
The village where I come from in Masaka has a solution to the global village in the form of a tree that produces backcloth. The tree is renewable. It gives you back for about 60 years and it stays for over 100 years. So as an artist who has traveled, and I have experimented with other materials, I'm thinking about what am I going to pass on to generations.
Backcloth is harvested from the inner bark of a soft fig tree, locally known as mutuba. UNESCO declared the fabric a masterpiece of intangible cultural heritage in 2005. Backcloth is gaining momentum in the realm of contemporary art and design. The tree fabric is finding its way into new markets as artists and designers look for new material to propel their work. From runways to online shops, designers are incorporating backcloth into their looks because of its sustainability and longevity.
I picked up interest in backcloth when I was still painting because I use it a lot when I'm painting. It's a fabric that is unique. When you look at it, it may seem so hard to work with, but then once you start working with it, once you learn the technique of using it, it's an amazing fabric.
Atal uses the fabric for clothing, decorated with patterns or mixed with other textiles. She wants backcloth to be a fashion identity for Uganda, but she is worried that the tree from which backcloth is produced may get extinct.
Looking for a place where they can buy it from is going to be a big challenge because most of the backcloth now producers have been booked. All the backcloth, like maybe for the next 2 years, all of it has been booked.
The demand for backcloth is, however, good news for skilled craftsmen like Paul Bukenya. On the other hand, Uganda's emerging designers and artists remain hopeful that backcloth will be the next environmentally friendly fabric. Michael Baleke, CCTV, Kampala.
Quick run through currencies here for you. The Kenyan shilling very much a focus point for us tonight, taking an entirely new 3-year low at about 97.15, 97.40 to the American dollar. Liquidity is also fairly tight. Interbank rates around 11.5 percentage points. So it should be fair. We have all makings here really for a very interesting week ahead. But that's it for this edition of the program. As always, thank you very much for watching. We value your feedback, your ideas on what we should cover and what we shouldn't. Global Business Africa at cctv.com is the email address to use. As always, Facebook and Twitter are also your ports of call when we are not on air. See you on Monday, people. Have a great weekend. Thank you for watching.